Hello dear ladies and gentlemen, welcome to NSBroker, and it is weekly market overview with Richard Bridges. Today I would like to talk about sanctions and how sanctions on some particular country influence world economy. As you might know that United States and European Union quite often impose sanctions on some particular states. For example, sanctions on Russia that were imposed recently by Biden administration and actually on Russian stocks and bonds, and also sanctions imposed upon Iran, as these sanctions were offered by Trump administration and were valid till today, and now there is a possibility that new Biden administration might cancel these sanctions upon Iran, but even though there are European sanctions on this country as well, and in the United States this question is still under discussion. And this situation influences not only economy of the countries under sanctions, but world economy in general. Because in case of Russia and Iran, these particular countries are oil exporters. And as we can see that recently price for the oil was growing significantly, and these new sanctions might influence oil market as well. And for example, if United States and Biden administration cancel sanctions imposed upon Iran or make it even less strict, Iran will definitely start selling more oil on the world market. And the same situation with Russia, because if sanctions are imposed on certain Russian companies, it might have difficulties to sell oil and gas directly to different countries. And obviously all this situation with the sanctions might influence price for the oil, and as we can see that even now price for the oil is growing. Also this week I would like to speak about German economy. As we might see from news that even though German economy is doing fine, it's top economy of European Union, because of lockdown it's shrinking a bit, and we can see, for example, in this news from Reuters that certain economists and institutions say that German economy shrank on 1.8% in first quarter of this year, and exactly because of lockdown. And if we look at German stock index, DAX 30, it's growing constantly for a really long period of time. And as we can see that it is growing like all winter, all spring, and even till now. It's growing. And price is quite high, over 15,000 for stock index. And this decline of the German economy, even slight decline on 1 or 2%, between 1 and 2%, might influence price for German stock index. And looking at this graph, we might think that German stock index is overheated, and some changes are expected to happen in the nearest future. And of course, all traders, all investors have to be ready and have to consider this opportunity. Also this week I would like to speak about Australian and situation in Australia and with Australian dollars. As we might know that just recently Australia was experiencing natural disasters and floods, and weather conditions were really strict, and it did a lot of harm to Australian economy and Australian people, and of course influenced national currency as well. And now we can see that a country is opening borders to visitors, and that Australia is planning to cancel lockdown measures to make it less strict to attract visitors, tourists to the country and to help Australian economy to recover. And of course, because of this situation, we can expect some changes in the price for Australian dollars. And as we can see that recently graph was going up, and now considering these new changes and new measures from Australian government to attract international tourists, we can expect some interesting changes that might be attractive for investors. And of course, they can use this situation and this information for their own benefit. It was Richard Bridges with Weekly Market Overview, and see you next week.